right. Well, there's no time like the present, so let's get started. My name is Sean Casemore. I want to welcome you here to another one of our NGen's What's Next presentations, where we bring to you cutting edge information, really is the goal, to help you as a Canadian manufacturer navigate the environment that's out there. Today, we have the good fortune of being joined by some individuals from Aon. They will talk a lot about intellectual property risk management for Canadian manufacturers, what you need to know, and most importantly, how you can protect your intellectual property. Today's session is being recorded, so we will make sure we distribute those recordings out to you following the presentation. And I'll mention just quickly as well, if you have questions as we go, you have two sources, two solutions, and you're probably familiar with them by now, aren't we all? You can either use the Q&A box and type your question in there, or you can use the chat box. I will be monitoring both. When the presentation is done, we expect it'll probably be just under an hour for the presentation. Then we'll launch into Q&A mode, at which time I will ask the questions of our panel here today from Aon. So make sure you capture those questions in either the Q&A tab or the chat tab, and then I will ask those of our guests following their presentation today. All right, so without further ado, I'm going to introduce one of our presenters, Shannon Shannon, and she will introduce the rest of the panel. Shannon Shannon is the Vice President producer for Aon, the Aon Risk Management Practice. She currently serves focused on both manufacturing and technology sectors. She's based in their Toronto office, and some of her areas of expertise include risk management consulting, new business development and relationship management, supporting initiatives for IP solutions, supporting initiatives for litigation risk, and special opportunities groups, as well as sales coaching. So a lot of experience, and very excited here to have Shannon and her team join us. So with that, Shannon, I'll turn it over to you to introduce the rest of the team.
Sean, thank you so much. We are extremely grateful to you, Dr. Myers, and the whole NGen team for inviting us here to talk with your members today. So good afternoon to everybody. We are incredibly pleased to have so many NGen members join us. My name is Shannon Shannon. If you saw the invite and thought that there had been a typo, there wasn't. That's actually my name. I am an insurance broker with Aon, headquartered in our beautiful Toronto office, though not today. I'm focused, as Sean said, on the manufacturing and technology sectors. And for the last 2 years, I've been very specifically focused on helping our clients manage, protect, and collateralize their intellectual property. Having built our manufacturing practice around traditional property casualty risks that face our clients, like business interruption and product liability, it was really exciting for us that in 2018, Aon invested in substantial resources to address risks and opportunities in the intellectual property of our clients. We started with a very strong team of about 40 people. But today that group has grown into an IP practice of more than 150 colleagues, with many of those being some of the world's leading IP practitioners. I am extremely pleased to be joined by some of those colleagues today. So Peter Holz is a Senior Vice President at Aon. He heads up our commercial IP risk division. I'm also so pleased to have here two of our incredible brokers on our IP team, Sarah Olick-Sutphin and Josh Cantilapelli. Our IP team, we started in the US, and to date, that's where the majority of our IP leaders and brokers are, but we have the capacity to work with clients globally. And all of Peter, Sarah, and Josh work very regularly with Canadian companies. In my own book of business, I also straddle the border, though the majority of my clients are Canadian. So just a little housekeeping before I turn it over to Peter. We do have a deck with a number of talking points that will be relevant and hopefully interesting to this audience. But the very best sessions that we've ever had have been ones that are responding to real-time questions and conversations. We want this to be valuable to you who are listening. So we highly encourage you to interrupt, interject, and interact. So as Sean said, please put your questions in the chat. If we have the ability to take you off mute, I'm not sure that we do, then please raise your hand. Sean, please interrupt me if you can hear me, and that's not even a possibility. But really, like he said, the question and the Q&A buttons, please put your questions in there. We will address them as we go. We have about 45 minutes of things to talk about, and we want to leave 45 minutes for discussion. So please do guide us as to what is most compelling to you. And with that, I will turn it over to Peter to start the discussion.
Thank you, Shannon, and thanks everybody for joining. Big thanks to the NGen team and Sean for putting this on. So as Shannon said, I help lead our IP risk business here at Aon, and I'm lucky enough that you guys don't have to listen to me talk for the full 45 minutes. So what we're going to really try to dive into is very quick on who we are, but really when we say IP risk, how do we think about IP risk? How is IP risk evolving, changing? And what are our clients saying to us? And then we're going to walk through a little bit about how do you manage IP risk, right? What solutions are out there in the market? What does coverage look like? What's the process look like? And how has that changed as time's gone on? And then the last thing is take you through a few real life examples of some IP claims that we've worked on here at Aon. So with that, our team that Shannon said, 150 people. I don't want to talk too much about us, but I do want to highlight two things. Shannon said it. We are predominantly based in the US. We have members of our team all over the world, however. So we have colleagues in all over North America, London, Bermuda, and Asia. So we serve clients ranging from Fortune 5 to pre-revenue startups and everything in between. I always give the example, and Shannon's probably heard this far too many times, but we have clients that range from high-tech software providers, technology we're using today, all the way down to carpet manufacturers and everything in between. So I highlight that just to say IP is typically thought of as a high-tech, the Philips, the Googles, the Microsofts of the world. IP is a risk in an asset that every one of our clients has, whether you're manufacturing steel, manufacturing widgets that go into LED screens. Everybody has varying degrees of IP risk, but IP risk nonetheless. So on the next slide, we'll touch on what do we think IP risk is and how's it growing. So focused on the US, candidly, because there's just significantly better data. And there is a correlation, which I'll touch on here shortly for Canadian clients. But IP risk has grown pretty considerably in the last 18 to 24 months. So we saw a really big spike in IP litigation globally as a result of COVID, and we'll touch on why that is here in a second. But who has IP risk? I mentioned we have a pretty broad range of clients. It doesn't matter if you own patents. It doesn't matter whether or not you think you're infringing IP of third parties. IP risk is really at the core, the risk that your product or service infringes third-party IP. And you'll hear us say IP a lot. What do we mean by IP? So the obvious one is patents, right? Most people know what patents are, but also copyrights, trademarks, designs, and trade secrets are becoming increasingly relevant when it comes to IP risk. So every company has IP risk, whether you provide a service, a product, or a combination thereof. And then the last big thing is IP infringement is typically accidental. Most companies do not intentionally infringe third-party IP. The reason why there's so many IP infringement claims is because, one, if you've read, for example, a patent, it's a great way to fall asleep late at night. But they're very long, ambiguous, run-on sentences that describe an invention, a design, or a utility. And they're very hard to say we're not infringing on that or we are infringing on that. So most folks will work with outside counsel and do their very best to not unintentionally infringe third party. But you have things like patent trolls who will just assert and try to get quick settlements, or sometimes have material claims and get larger settlements. You have competitor versus competitor, or operating company versus operating company litigation. Sometimes there's merit to that. Sometimes there's commercial motivation. And then the third piece is international exposure. You might be really focused on distribution and product sales in Canada, for example, or the US. But you also might sell product in Europe where you either haven't done as much IP landscaping or don't have as much IP to deter competitor litigation. These are all factors that drive IP risk and IP litigation. The last thing is how catastrophic can IP issues be? So in the US, for example, the average IP case all the way through trial cost on average $3.1 million. There are damage awards ranging from $1 million all the way up to $1 billion plus. And that's not just a US issue. So we've had claims in multiple jurisdictions. And for example, in Europe, you'd expect it to be a lot cheaper. It hasn't been historically in a lot of the claims we've dealt with. The next slide just looks at what IP litigation over the last few years has looked like. And you'll see a huge drop in 2015. That's predominantly because in the US, there was a ruling, the Alice versus CLA Bank ruling, that made asserting software patents much more difficult. But you'll see in 2019, 2020, IP litigation starting to tick upwards. Now, why is that? One, we have COVID, and two, early days of COVID, a lot of clients or companies thought that they were going to be entering a recession. Now, I think today we believe we're entering a recessionary environment. I think I saw something on the news that we might, in the US at least, formally be in a recession. But in recessionary environments, you see pretty considerable upticks in litigation. We expect this to continue to increase, especially as globalization continues, as well as product innovation in industries that are starting to merge more and more with technology and digitization, entering more and more unintended IP that maybe historically hasn't been an issue. If you slip 2 slides, Sarah, I want to touch on the economic uncertainty. So this is what I was just talking about. So our team, a big part of our team is our data and analytics practice. And what we've asked them to do is look at the last 8 recessions here in the US, which is as far back we have IP litigation data. And in each recession, there has been an uptick in IP litigation ranging from 14% to 26%. Again, for the reasons that I said, companies are trying to generate additional income, potentially liquidating assets to third parties, or just trying to monetize their intellectual property to generate additional income. So one of the things and the themes that we've been seeing with our marketplace is more clients reaching out to us because of this theme, right? They know that maybe the good times are over. We might be entering a recessionary environment, and they know historically IP litigation and recessionary environments have an inverse relationship. One of the biggest drivers of that has been here in the US, but Shannon's familiar with the fact that we have about 26, 27 new accounts in Canada in the last couple of weeks alone. So it is not just a US issue, although oftentimes us Americans, we do love to sue and people think that is a US issue. We do have a lot of clients here in Canada, in the US, in Europe, and as well as in parts of Asia. So with that, I'm very happy to say you guys don't have to hear me speak for a few more slides. So I will turn it over to Sarah and Josh to take you through the next couple.
Yeah, thanks, Pete. So as Pete was talking about, patent cases in general over the past couple of years, what we really wanted to look at here was, okay, but what does that look like specifically within the manufacturing industry? So this slide and the next, we broke it down into 2 different revenue bands. So this one is obviously on the smaller side, and the next one we'll look at a bit bigger. So as you can see, even though in the past couple of years, 2018 to 2020, you see it trending downwards. Although it started off very high, just at, peaked over 200 in 2013, and we're still averaging about 171 cases per year, which is quite a lot. Mean damages here sitting around that 8 million number. And as you can see, they can go anywhere all the way up to 20.77. One thing that I want to point out before we go even further into the next slide, but as Pete mentioned, this is US based purely because we have more data to draw from here. But as he was saying, we can draw parallels between what's happening in the US and what we can see or what we expect to see in Canada, especially as a result of the pandemic and, whether or not we are entering a recession formally or informally.
Hey, Sarah, one thing I'd add too, which I forgot to mention, but we only have sight into both formal litigation for frequency and damage awards for severity. One of the big things in IP is most cases don't make their way to a formal litigation, and those that do make their way to litigation oftentimes are settled prior to a damage award. So we, in surveys with third-party legal firms, as well as there's a couple studies out there, We estimate that there's about 4 to 5x more litigations per year in every industry that are pre-litigation matters that are not reflected in this data just because they are by definition confidential.
Yeah, that's a great point. I think the exact stat is only 3% of cases actually make it through to the damages stage. So that's a good point. And even with that, we can take that 171 average number, multiply that by 4 or 5 times, and that's probably a more accurate number of how many IP issues are being handled year over year. So the next one will be quick, pretty much looking at the same thing, but just with a bigger revenue band. So bumping up from that 10 to 100 to the 101 billion revenue band. As you can see, number of average cases is pretty much the same, though those mean damages and 90th percentile damages are higher. So as you can see, you know, your companies are gaining more revenue, they'll have more to calculate damages off of. And just to reiterate, it's probably a lot more than that. These are just the ones that have gone through to damages. So, you know, this kind of wraps up our portion of trends that we're seeing overall with patent litigation, IP litigation in general, in the market and specifically within the manufacturing industry, which leads us to, okay, how can we mitigate that risk? How can we get on the front end of it, protect our balance sheet in case something like this does happen? Obviously, 9 times out of 10, no one knows that they're infringing on someone else's IP with their products and services, just because there's purely too much on the market to keep up with, even if you are doing searches as you're filing for patents, as you're entering new products and services into the market. And this was really the need that Aon saw when they entered this space was, okay, typically patents and trade secrets are excluded from every type of coverage that's out there. What you'll see the most overlap with is that cyber coverage. You are afforded some trademarks, some copyright coverage, but it's pretty limited in nature. So what Aon was able to do since entering the space is really merge that gap between insurance. So providing coverage for patents, copyrights, trademarks, trade secrets on a more holistic basis, and having a standalone policy to cover these costs. So essentially what it is it's a defensive policy in nature that will cover legal fees, settlements, and or damages that are incurred by the insured as a result of your products or your services infringing on a third party's IP, whether that be their patent, their copyright, or their trademark. Another thing that it's able to do, and that I typically like to break this down into 3 main insuring clauses. So the one that I just mentioned is IP infringement defense. The second one would be indemnified party defense, which we think would probably be most relevant for manufacturing clients. Having the ability to cover contracts that you're entering into, whether it be for the development of a product or the sale of a product, allowing you to transfer that risk onto the insurance market where you are indemnified or you are required to indemnify another party, and they subsequently get sued, you know, whether it's they're putting your product on their shelves, subsequently get sued, they can then turn to you and you'll have the insurance policy in the background to really pick up those costs, again, associated with those legal fees, settlements, and or damages. So I typically like to think of the first 2 as really protecting the products and the services that you're putting out into the market, which leaves us with, okay, how do you protect the IP that you actually own? Which brings us to the third element of coverage, which is IP rights protection. This is intended to cover any fees associated with invalidity challenges you may get, challenges to your IP rights, whatever it may be. So really allowing you to safeguard your own IP assets and allow you to continue in the development of your products that you're putting out there. A few other things that I'll mention that we've been able to negotiate with markets is having competitors for both having coverage for both competitors and NPEs, also known as non-practicing entities or patent trolls. And for those of you who aren't familiar, these are entities that buy up the rights to patents purely to go sue people and get settlements for these issues. They are not putting any products out into the market. Their business is just buying things up and suing people. There is worldwide coverage available, so including US, Canada, EMEA, There are a few entities that are excluded now purely as a result of the political climate, but we won't get into that right now. As well as the insured does have choice of counsel for these matters. And Pete, maybe at this point, I'll turn it back over to you just to add a few more things, because I know we just got our new policy form approved for use in Canada, walking through a bit of the extra coverages that we were able to procure.
Yeah, so thanks, Sarah. So I think there's a couple things I'd add before going there. One is just in terms of coverage as manufacturers in Canada, what are the big things that I think to focus on? So obviously, Sarah hit on direct infringement allegations. So if you receive a threat or a formal litigation, have a coverage in place to provide reimbursement for legal fees and expenses, settlements and damages. That's the very obvious one. The second area, though, and I think one of the big things that drives manufacturing purchases is the contractual indemnity piece. So Sarah and I have a few clients that are buying predominantly because they provide IP indemnities to large customers, global customers, and they're indemnifying either a considerable portion, so a $10 or $25 million cap on their indemnities, or we're seeing more and more companies requesting or requiring uncapped indemnities. So there's a couple pieces to that, which are one, do you actually have the balance sheet to stand behind that indemnity first and foremost? And if not, can you have an insurance contract sit there to kind of remove that credit risk, but also remove the risk that in the event your customer is sued as a result of your product or service, you don't have to take that off of your balance sheet. So I just highlight that that is one of the biggest drivers in the manufacturing space of customers buying coverage. So Sarah mentioned we have a couple new coverage elements that have just rolled out in some of our markets. The first one is trade secret enforcement. So if an employee of yours or a third party you believe has misappropriated your trade secrets, you can now have coverage to provide reimbursement costs for the legal fees associated with bringing that trade secret enforcement claim. Similarly, we're seeing more small companies, call it sub $40 million in revenue, able to procure patent enforcement coverage. So same concept on the trade secret side, but for patents. So if you and your outside counsel believe that a third party is infringing your intellectual property, there's no coverage available to actually go enforce your intellectual property. The last thing I think is really important is breach of contract coverage. So both breach of contract enforcement. So if somebody in a contract you believe has misappropriated your intellectual property or not paid their annual license fees, you can enforce or that you can bring a contract enforcement claim. And similarly, protect yourself in the event that one of your customers or vendors accuses you of misappropriating trade secrets that you're contractually obligated to keep either confidential or not disclosed to third parties. So those are three new coverage elements. Again, focusing on patent enforcement is one of the biggest drivers of coverage, contractual indemnity coverage, and then obviously your straight balance sheet protection for third-party IP issues. The last piece, Sarah, and then I promise I'll get off my soapbox. But understanding the global environment we live in, more and more trade is becoming international or cross-border. And understanding that Canadian IP risk is one thing, multiply that when you start doing business with Asia, Europe, the US, becomes exponentially greater. And I think is a big reason why more and more Canadian clients, as well as non-US clients, are buying coverage at a similar, if not outpaced rate to the US. Maybe this is a good place to pause and just see if the group has any questions before we go through a couple of case studies and claims examples for the group.
Yeah, so thanks, Peter. So if you have questions, you can put them in the chat box below if you prefer. You can add them to the Q&A panel, or we can probably raise them here. There was a couple that came in, and I'll share one of them to begin with. And it was this: if a manufacturer is somewhat small, so let's say they're in the sub 10 million, right? Mm-hmm. They're not large. They don't have any IP protection in place at all. What are your recommendations around a good starting point? You know, as far as putting in some basic protection for a smaller manufacturer.
So Sean, really good question. I think if you take one step back, there's a misconception that if you have IP, if you have patents, for example, you're protecting yourself and you can't get sued if you have a patent on a design or a process. Ironically, that's not really what a patent does, right? A patent is not a shield, it's a sword. And what I mean by that is a patent or IP doesn't give you the right to do something. It gives you the right to exclude others from doing something. So for small companies, especially that sub $10, $25 million revenue range, I think there's a couple of things I'd start with. First and foremost, it's understanding what the contractual indemnity obligations you have to your customers is, first and foremost. And then two, looking at litigation trends in your specific product or industry. So our tool right now, we looked at a very broad range of manufacturing clients. We can actually drill down to a product level. So depending on what product you're looking at, we can look at who owns IP in that space. How litigious is this? And we're not going to do a freedom to operate search, which has a bunch of legal ramifications. But we can start to kind of think about what is your risk, right? In a worst case scenario, somebody sues you, what does your exposure look like? And then we can explore transferring that to the commercial market. I think one of the nice things also about being a smaller company is you have a smaller damage base. So IP risk is determined based off the alleged infringing revenue. If you only have $10 million, your exposure is going to be relatively small, which is good for two reasons. One, it allows you to get a program in place to protect your balance sheet early for a very affordable cost. But two, you don't have to buy that much limit, right? And if you think about what costs money in insurance, it's the more insurance you buy. The insurance on a $10 million house is going to be a lot more expensive than a $1 million house. It's the same concept in IP. So I think the first step, Sean, is understand what your risk landscape looks like, which is something we can help with. And then the second is explore IP insurance and weigh the cost benefit of having coverage and that kind of confidence that your balance sheet won't get impacted by an IP issue versus going without coverage and the premium savings that you would get from that.
Okay, thanks, Peter. And the second question, and you've kind of addressed it here, but I'll ask it again just in case there's anything to add. Is again, if I was unsure of whether I should even be protecting, I've been manufacturing products, I've been designing them, been selling them. I don't even know if I should be protecting anything, or even what the first step would be. So never mind the landscape. How would I even know if there may be some designs, products, et cetera, that I should actually protect? Is there a way to do so?
Yeah, so I'm going to give an example and then I'll answer the question very bluntly. So an industry that you probably don't think has a lot of IP risk, the retail industry. We've seen a lot more retailers coming up for coverage, and the reason for it is a lot of them have recently gotten sued because of IP pertaining to the barcode scan code thing. When you check out and they pass it through and it goes beep and has the price, right? There's a lot of IP on that. Retailers did not realize that. Or another industry where we work a lot with online retailers, and there's IP around how you market certain things and how do you elevate certain pictures or advertisement on a page based on previous user experience. So there's things in IP that aren't obvious. You can build something entirely yourself, not look at any third-party products, and still unintentionally infringe. And the reason for it is you could infringe IP that's in that industry, right? One of your direct competitors has 50 patents on this area. Or what more commonly happens is ancillary industries or ancillary IP that might not be directly pertaining to your manufacturing process or product could unintentionally read on that IP. And that's why we've seen IP insurance as one of the best ways to mitigate IP risk. Where you can go hire the best law firms in the world and they'll do an incredible job, but they cannot provide certainty that you're not going to, one, receive a case without or with merit, but two, they also can't guarantee what that cost would be in the event you did have one. IP insurance is really the only way to give yourself that certainty around if there's an issue. I know that as long as it costs less than this, I'm good.
Great, thanks, Peter. That's the only questions we've had come in so far.
Awesome. Well, I'm going to turn it over to, I think, Josh for this next section to walk through a couple of different case studies in the manufacturing space, as well as how we've looked at portfolio programs for similar type companies. So with that, Josh, over to you.
Thanks, Peter. I think this one in particular is a great example of how IP liability is not only used to protect your assets, but also leveraged as a business enabler. This particular example is an auto parts manufacturer. They ran into a bit of a hurdle when talking with a major auto supplier, and those concerns were primarily around the contractual indemnity side of the deal. And our team here at Aon was able to articulate that indemnities are in fact insurable, like Sarah had mentioned. And through the purchase of the IPL coverage, they were not only able to transfer the risk, their infringement risk, but as well as their contractual risk over to the insurer. This decision not only opened up the window for them to secure their largest deal to date, but allowed them to avoid escrow and provided peace of mind for both the supplier and manufacturer. And Sarah, I think we can jump over to the portfolio one, which I find this one to be quite interesting. We had a great opportunity to work with another Canadian organization to put together a first of its kind IP liability portfolio program. We had 26 participating members within this organization who could very much similarly be in the same boat as you guys were several months back, where they were not too familiar with IP coverage. So through ongoing conversations, we were able to articulate the importance, particularly within such a litigious and innovative space. And then following those, we were able to provide them with several different coverage options from a few different insurers. And it really showed the ability to tailor coverage to what really best fits you, your company, and or your organization, such as NGen. Once that organization was able to pin down which option best fit them, we were able to save all 26 companies roughly about 30% in premium. And not only was able to keep the window open for more companies to join year over year, but it also protect the company's assets as well as the contractual indemnity. I don't know if you want to jump into anything else there, Peter.
Yeah, if you give me the window, I'll jump through it and and add something. So I think this is really interesting. So similar to how you think about group discounts, if you guys were to go, for example, on a vacation, 10 of you guys booked the same reservation, went to a travel agent and said, can we get a deal? It's kind of the same for IP insurance, except for the technical difference is the insurers are trying to diversify their pool of risk. And if we can go to the market with 10, 50, 100, 200, 1,000 companies, everybody in that portfolio will benefit considerably for a couple of reasons. One, the insurers can say with confidence that this is a diversified pool of risk, and everybody will receive a considerably cheaper IP program than if they went direct to the market. The second piece is it gives us more leverage with the markets, given its larger premium amount. So for example, if you're paying $5,000, $6,000 for your IP coverage through the portfolio program and you're one-off paying 10 grand for IP coverage, the insurers have less incentive to get aggressive with pricing, but also with the coverages that they provide. So we were able in this program to essentially give IP enforcement coverage, basically the coverage to pay for your enforcement of your rights for free, as well as saving 30% on the open market opportunity that they would have had if they did not participate as part of a program. So I think portfolio programs are a really interesting concept that give the entire group considerable benefit. And as an individual member or contributor, your benefit, your coverage is going to be much cheaper and broader than it would be if you were to enter the market on an open market basis. So just to kind of hammer home that point, I think portfolio programs are a really efficient way, especially for smaller companies, to get the best coverage possible at a much more competitive price. Sarah, are you going to take us through these claims examples next?
I sure am.
Awesome.
So after all that talk about how great the coverage is, we thought we would provide you with a few examples of how exactly it works. So this was a client that we had ultimately paid out $500K on their claim. They were a high-tech manufacturing company, around 250 million annual revenues, growing quickly over the next couple of years through contracts and internal business development. So they were actually sued by a non-practicing entity rather than a competitor. They were very active in the technology space. They had been suing several of their competitors over the couple of years. However, the client didn't see it coming. And ultimately, what we were able to do over the long process of about 8 months, going back and forth in negotiations between the company and the NPE, and also keeping the insurers in the loop, was they were able to lean on their IP liability policy that they had placed years prior and just kept renewing. So they had a $10 million limit with a $250K retention per claim. So ultimately, once they paid that first $250K with, through their retention, the insurance market paid out an additional 100 and then 400 for the actual settlement that they agreed to with the NPE. So really just wanted to highlight how the insurance actually works, what the process looks like when a claim does come in, how you notice the insurer and the process for keeping them in the loop, and ultimately just showing that the insurance does work. Pete, Josh, anything to add there? We have one more example that's pretty similar.
No, I think the one thing I'd highlight is this is a slightly larger client than I think the average NGen client. But one of the other benefits is, especially as a younger company, if you don't have, for example, a dedicated legal team, or you might not have as much experience in IP litigation or IP litigation in different geographies, the insurance process you get to run, but there are insurance resources available to provide kind of thoughts on, hey, if you need counsel, here's who we know has been successful in this space previously, or here are typical next steps. We have a claims team of about 35 litigation or coverage litigators on our team that advocate on your behalf with the insurers, and we have 150 people on our IP team who can provide resources, help, and advice throughout the process. So it's a kind of non-financial benefit of coverage, especially as a young company, to work through some of these processes that you may not have experience or expertise in today and likely will in the future.
Yeah, Pete, and I think this next case study really exemplifies that. So this one was a pre-IPO company, and we do have statistics which we didn't include in this presentation, but we do work with pre-IPO companies, and we've done some research basically showing that in the years leading up to and a couple of years after a company IPOs, they actually do see a spike in litigation purely because their name is in the press more people are becoming aware of their products and their technology that they're putting out there. So as companies think about, nearing an IPO, they really should have coverage in place, whether they and I'm sure no one thinks that they are infringing on anyone else's IP, but really just adding that extra layer of protection to have that insurance policy sit there. And as you can see in this case, the insurance ultimately did pay a large settlement amount along with some legal fees. So this was especially important for that pre-IPO company that may not have necessarily had all of that cash laying around to pay out on a claim like this. Really just having that help protect their balance sheet in this case. And I believe this is the last slide that we have. Really just wanted to end with some claims examples. So Pete or Josh, Shannon, if you don't have anything to add, I think we're okay to open it up for questions at this stage.
Yeah, Sarah, I know there is one question, and I'm looking forward to having one of you guys answer it, but I was just thinking when you were talking about this claims slide that maybe one of the things we didn't put in a slide into our presentation is really the cost of IP coverage. So I'm particularly interested. I mean, of course, we won't have data that we can share on what this particular pre-IPO manufacturer was paying for premiums, but maybe you could just talk at a very high level about what the cost of coverage is.
Yeah, sure. And I'm not sure if any of you have explored IP insurance in the past, but the story we typically like to tell is if you were to look at it 5, even 3 years ago before Aon was able to enter the space, was coverage was typically priced too expensive and was too limited to really make sense for people to buy. So since we've been working with insurers, getting them more comfortable with IP as a risk and an asset class, we've been able to bring that pricing down to around 1 to 3% rate online. And Pete, I'm sure, we've seen recently in some cases even less than 1% for those really small, not as risky companies. The biggest driver, the biggest differences that we'll see are across industries. So tech, large tech clients tend to be more expensive. But the biggest thing I think that we've seen lately is, as long as a company hasn't been involved in litigation in the past, or it hasn't been very costly, we typically see it in that 1% to 2% range. The great thing about this coverage is it gives us the ability to really tailor it over time. So maybe for those smaller companies looking to get coverage in place now, really just have it as some layer of protection, get it priced now at around 1% to 2% for maybe 3 million in limits. And then as you grow and your business evolves over the next couple of years, we can look to increase those limits and right size the program with the retention and co-insurance and coverages and all of that. Pete, you took yourself off mute, so I'm thinking you have something to add.
No, well, yes. I think you hit the nail on the head. I would say for smaller clients, particularly in Canada, we would expect that rate to be 1% or sub 1%. Again, just there is a difference in risk, and one of the biggest benefits of being a Canadian client is we get to tell insurers that you don't predominantly do business in the US, and that has a material premium saving opportunity there. So for example, I know a bunch of our Canadian clients have a rate closer to 7.7%. So put that in real terms, if you buy $1 million of coverage, that's about $7,000 in premium.
And just to confirm, that's if an individual company is going to the markets themselves, right? It's outside of a portfolio program. And the reason
we'd expect 20% savings to 40% savings as part of a broader portfolio.
Thanks, Peter. And the only reason I wanted to clarify that is because Jay Myers and the NGen team were at very early stages of talking about it, but that is actually how I got introduced to NGen, is because it is a portfolio program is a consideration for NGen members. So stay tuned on that.
Great. Peter, you're muted, I think. I'm not sure. There you go.
That would help. I do see a question from Dilip. So the question is, when handling an NPE-based claim, do you simply look at the end of process and limit exposure, or do you promote positions by trying to invalidate IP assets owned by the NPE? That is a great question. So part of the defense provisions in the policy is you get to drive the litigation as you commercially would. And what we mean by that is things like counterclaims or one-on-one challenges or invalidity challenges are all covered actions under the policy. So you would take essentially what you think is in the best interest of your business, and you could manage the claim that way. So real example, if you were sued by a patent troll, and let's say the patent has not yet been challenged, you could try to invalidate the patent, or if it's a $10,000, $20,000 settlement offer, the commercially reasonable response would be to just pay the 10 or 20,000 instead of potentially the 100 or 200,000 for the invalidity proceedings. So it really is up to both. There is the requirement to get the insurer's consent, but it really is what's the most commercial route for you and what's the most commercially available solution to mitigate this. Is that any follow-on questions with that? Oh, sorry, Sean.
Yeah, no, that's okay. I just entered into the chat panel. If there are other questions, now is your opportunity. Please enter them into the Q&A panel. You can enter them into chat, whatever works most appropriately for you. And I'm going to assume, because there's no follow-up, that you answered that question well. So we'll just give it another minute or so here to see if there's other questions, and then we'll turn it back to maybe yourself, Shannon. Peter, for some closing comment. Oh, to Shannon. Yeah. Okay, for some closing comments. So again, any questions at all, feel free to enter them in the Q&A box or into the chat panel. We'll make sure we answer them. If you have questions that come up post this event, so something comes to mind after we're done here, if you want to send them back when you receive the recording, just reply with your question, and we will get that over to Shannon and the team here to address it as well, and be able to circle back that way. All right, so this doesn't look like there's any further questions. So Shannon, I'll turn it back to you for closing comments.
Yeah, thanks, Sean. This is the quietest group I think that we've had around IP. I'm going to take it to mean that everyone on this call is an IP expert. But as Sean said, whether or not you are a current client of Aon or not, we are extremely happy to answer questions that you have or talk about your IP strategy at a very high level. So like Sean said, he's going to be sending out the recording, and we can connect with myself or Peter, Sarah, Josh on LinkedIn. If it's helpful, we would be delighted to talk through your IP strategy with you. And once again, Sean, extremely grateful to you and to Kim today for letting us speak to your members.
That's great. Well, I want to thank you all for taking time out of your busy days to join us. Obviously, when it comes to NGen and our members, IP is important, hence why we've had a number of people here joining us today. And we look forward to future communications so that we can share that with our members and protect everyone's IP so that we can continue to advance manufacturing in Canada. So again, thank you everybody from Aon today for joining us. Thank you to all of our guests who participated and joined us here today. We will send this recording out and watch for us. We're going to take a little bit of a break in August here just because of a lot of people away on holidays, we realize, but watch your mail for September's event. Mr. Peter Hall will be coming back. I think it's September 15th, but don't quote me. Watch your mail. He's going to be doing an economic update with what's happening. So stay tuned for that. It's going to be very exciting. Thanks again to our panelists. Thanks again for you to joining us here today. Look forward to seeing everybody again soon. Take care.
Thanks, Sean. Thank you, team.
Thanks, everyone.